Learn how to invest in stocks for beginners. Investing in stocks for beginners can be quite daunting and confusing. There are a lot of factors that play into the success or failure of your investment. But don't worry. In this video, I will walk you through the process and show you how to get started. It's important to know what you're getting into before making any major life decisions like investing in stocks. It's also key to make sure that your investments are set up properly and your risk is low. Welcome to Stocks Galore, the place for those in passionate pursuit of financial freedom. Smash the like button now and subscribe to our channel to be notified when new videos are released. Investing in stocks is a highly risky and exciting process. One should have a strategy before they start investing in stocks. Investing is not for everyone. There are different levels of risk involved with it based on the amount of money you would like to invest. Without understanding how to invest, you can lose your money quickly, so you need to be very careful when investing. In order to invest in stocks, it is important to know what kind of stocks you should buy. In general, the best way to invest in stocks is by buying a company that has a low P/E ratio. P/E ratio stands for price to earnings ratio, and it is calculated by dividing the company's market capitalization by its earnings per share. A P/E ratio below 20 is considered a good one, and below 10 is even better. Investing in individual stocks can be risky and expensive, and many would be content with just buying index funds instead. However, an index fund only holds the top 10 most popular stocks on the market, which means you're not getting exposure to all of the companies on that exchange or on that stock exchange. What is investing and why should you care about investing? Investing is a practice of capital allocation and business management. It is the process by which an investor, or group of investors, gives money to an entity in exchange for financial return on investment. In order to generate more interest and activity, this section would introduce the viewers to the basics of investing. The viewers will be introduced to what it really means and how it can help them in achieving their financial goals. Investing involves 3 stages: pre-investment, investment, and post-investment. These 3 stages are usually done one after another, with no waiting time between each stage. Pre-investment stage is the period before an investment. It is where the investor assesses his risk tolerance and also researches on investments that he might want to learn about more before making a decision on whether or not he should invest his money. The investment stage is where you make the actual investments to start getting your money back. The post-investment stage is when your profits start coming and you're preparing to cash out from your investment. Why investing in stocks is important? Investing in stocks is important because it provides a way to share in the profits through dividends. It also allows you to diversify your portfolio, which could potentially increase your odds of achieving financial freedom. Investing is the difference between being poor and rich. It is very important for people to invest at least 10% of their net worth in stocks. It provides an opportunity for people who are trying to achieve financial freedom, which allows them to stop working once they have enough money saved up for retirement or other things. Though investing might seem risky, it has helped many investors grow their wealth over time by providing them with the ability to build financial security into their future plans and better future prospects. The best way to start learning about stocks. This section provides a detailed introduction on the best way to start learning about stocks. Stocks are a security that represents a partial ownership of a company. When you buy stocks, you're buying shares in the company and hoping they increase in value. They can be bought and sold in a number of ways, but many people prefer to use the internet-based stock trading platform called an exchange, such as the New York Stock Exchange or NASDAQ. Trading online is more convenient than buying through the mail or over the phone with paper certificates, and it's done 24 hours a day, 7 days a week. There are many different types of stocks listed on these exchanges. The basic difference between them is how the stock is valued. Common stock is the most common type of stock on the market, so this type of stock represents ownership in a company. Preferred stock can be thought of as a loan to an investor, while treasury stocks are government securities that can be redeemed at some point in time. How do I get started with investing as a beginner? This video will teach you how to get started with stock investing and will give you some tips on what to do before investing. Investing in stocks is a popular pastime for many people. Many study finance or business in school and want to get into the field of investments. However, not all people know how to get started and should be cautious when they choose where to invest their money. The best way for beginners is not to invest in a company that they know nothing about or has a low number of shareholders, because there is a high risk that the company could go bankrupt if things don't go well with their business. The best way for beginners is putting their money in mutual funds or ETF from companies from different industries, because it would be difficult for one company to go bankrupt due to its competitors. Investing in stocks is a complicated form of asset management, but with the right approach, anyone can do it. To invest in stocks for beginners, you need to know how they work and how to read financial statements. You also have to have an understanding of the market, your risk tolerance, your investment time horizon, and how much money you are willing to put into the market. There are certain ways that you can start investing in the stock market for beginners that will be easier than getting into it all at once. You need to know what is your current financial condition and what you want to achieve with your investment before you choose the right path. What are the benefits of investing in stocks? When it comes to investing, the options are limited. This is why most people prefer to invest in some form of equity or stock shares. Some benefits of stock trading include the opportunities for high returns with little risk and the ability to diversify your portfolio among stocks, bonds, and cash. There are also trade-offs that come with investing in stocks, like lower liquidity and higher risk of losing money on a bad investment. Investing in stocks is not difficult, but it can be time-consuming and it requires some knowledge on how to invest. There are certain steps that investors should take before they invest. This includes determining the company's financial stability, understanding its competitive advantage over other competitors, and assessing its business model. Best ways to buy individual stocks. The best way to buy individual stocks is to use an online broker. However, it is important to note that online brokers are not the only way to invest in stock market. There are other options like investing through mutual funds or trading on the stock exchange. Online brokers provide automated trading services and tools for their clients to help them make the most out of their investment decisions. These tools include continuous changing of stocks based on machine learning algorithms. They also offer lower fees than other investment platforms, quick account opening, and low minimum deposit requirements. Mutual funds can be a better option when you want a diversified portfolio over your day-to-day trading activities. Some people don't have enough time or resources to build their own portfolio, so they choose mutual funds for this reason. The top 4 ways to build your stocks portfolio. Building your stocks portfolio is a great way to grow your wealth and ensure that you have access to wealth-building opportunities in the future. In order to build a solid investment strategy, it is important that you diversify across different sectors and countries. There are 4 things you should consider when building your stocks portfolio. The following are the top 4 ways to build your stocks portfolio. 1. Don't invest in every company when you first start investing in stocks. 2. Don't invest when you don't have a high level of confidence in a company. 3. Diversify across different sectors and investments. 4. Buy shares in small companies through your RRSP or TFSA. You should follow a strict investment plan and use risk management tools to minimize the impact of volatility on your long-term investments. You should also consider tax optimization strategies, such as using low-cost index funds or ETF to make sure that you maximize your gains while minimizing taxes. It is important that you invest in broad-based indexes instead of trying to spot which small company will produce the next big thing. By investing broadly, over time those small companies will eventually grow big. Final words on investing in stocks for beginners. The stock market is a volatile and unpredictable place. That's why the tips in this video are for everyone who is new to investing. I can't stress enough that this isn't financial advice. I'm not a financial expert and I don't pretend to be one. But as a first-time investor, here's what I learned. The stock market is volatile on purpose, so you don't want to invest everything you have on stocks or anything else for that matter. You want some wiggle room so you can buy low and sell high without losing too much of your money if things go south. Investing is an exciting and risky business, but it also has the potential to provide you with long-term wealth if done correctly. The most important thing with any investment strategy is to educate yourself with the basics of the market before you begin investing your money. If you enjoyed this video, smash the like button now and subscribe to our channel to be notified when new videos are released.